Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Sunday, December 4th. However, I am recording my raw notes for Friday, December 2nd. So these are my notes from Friday, December 2nd. Thank you very much for subscribing, viewing, and being part of the One Rental at a Time channel. I appreciate each and every one of you. So out of the gate on Friday, I dug a little deeper into the PCE report. Obviously, PCE core came in at 0.2, 5% year on year. It was down from 0.5 and 5.2 from last month. So again, PCE followed CPI, followed PPI lower. And, that was seen as a positive. We will get to the jobs number momentarily. Next, we had weekly jobless claims from that Thursday, which I didn't talk about. Were down, right? This is something that normally would be seen as good news. And unfortunately, it is seen as bad news because, again, one of the things that's very clear is the Fed is trying to slow down the employment market. So weekly jobless claims came in at 225,000, down 16,000. Layoffs are picking up. It is not your imagination. I have reported on many high tech. We have talked about others, but layoffs are up. It's much like foreclosures, right? They're up an impressive percentage. Layoffs are up 127% month on month, or 417%. But just like foreclosures, they are down from a very low level. So if you go from 4 to 16, that is 400%. Again, layoffs are up 417%. On Friday, we had the Senate approve and send to the president a bill that would force the rail unions to take at least a tentative agreement to avoid a shutdown or a strike. I don't follow politics all that closely, but I do believe Biden is one of the most pro-union presidents. I believe he ran on that. I'm not saying good or bad. I believe that's just one of the things he ran. And yet he forced the unions to accept at least the offer short term. That is obviously to save the economy, right? A rail strike in December, which would have been, I think, this week, would have been bad. There is no question. It was the right thing to do, but we will see. We will see where that goes. The student loan forgiveness has made it to the Supreme Court. This is very much like, I think, the eviction moratorium, which was eventually struck down as unconstitutional. The student loan program is now in front of, or will be in front of, the Supreme Court. They've accepted it. So we will see if he's gone a step too far, which I have spoke to many legal scholars and said the president doesn't quite have the power to do that. That is something that Congress needs to do. Not the president. So we'll see. The good news is we will have an answer shortly, and the Supreme Court will weigh in. Something else to point out is we have finally loaded another session of the mastermind. We, again, had a one rental at a time mastermind about a month ago, and we just loaded Omar's session. So if you're a member of my course, it is now as a bonus section. I will make sure to turn it on this morning. Since now that I've said it out loud, I got to go make sure it's there. I know it's loaded, but I do need to turn it on. So I will do that today. We had some earnings that we need to talk about, tech earnings. Marvell Tech missed top, missed bottom, gave weak guidance. Zscaler beat top, beat bottom, but gave weak guidance. Same with Asana. We are now seeing more and more tech companies issue weak guidance. I think this is something we are going to see going forward, especially in the cloud space. Blackstone. I don't know if you guys heard this, but Blackstone's private REIT, or non-publicly traded REIT you had to be invited to be a part of, one of the biggest REITs out there, is limiting withdrawals. It's something that's right in their docs. I think it's 2% a month or 5% a quarter. They are now limiting withdrawals because, again, they've hit their cap. We will see if this is a real big problem. Blackstone obviously took a hit on their stock. It is a stock that I own, so I added some more shares. Not a lot. I think it was 25, so not any crazy buys. But I told you I would keep you up to date. So I did buy another dividend stock, or added to my position in Blackstone. I don't see this as an issue for Blackstone, and we'll talk about this. I think I did some more reading on Saturday. I don't see this as an issue for Blackstone. Could it be an issue for the larger market? Absolutely. All right. It absolutely could. I think there's a lot of pain, a lot of liquidity issues. You've been hearing me talk about this for 6 or 9 months. Some of you didn't appreciate it, but I think it's here. You heard me talk with Anna and Jonathan, both large multifamily investors, and there's a lot of pain in the multifamily space. Can't imagine what would be happening in office and warehouse and things of that nature. There's a lot of pain because of the financing, right? We've talked about it. The financing, the syndications, all of this kind of short-term debt, bad assumptions, it's all coming home, and unfortunately there will be a lot of pain. So on to the job creation, as promised earlier, 263,000. Expectations were for 200. Average earnings went up 0.6, 5.1% annually. Expectation was for 0.3 and 4.6. Unemployment stayed the same at 3.7. However, yet again, labor participation ticked down again. We do have a problem. One of the long run things that we just have to admit or acknowledge is one of the reasons we are having such inflationary problems at the wage level is our immigration policy has been broken for 6 months. Now, I'm not calling for open borders or anything crazy like that. I'm just saying, we should be, in my opinion, the country that the all-stars come to, right? We need to have a process, a robust process to vet or qualify or whatever the right vocabulary is. But when we have the best of the best from around the world who are qualified and want to contribute and create in our economy, we need to let them in, right? We need to have a process for that, in my opinion. And yeah, we don't seem to have one. I think it's been 6, maybe 7 years. And I think we're paying the price for that as we go forward. Morgan Stanley up next, seeing a lot of housing pain. It's very interesting. Morgan Stanley must be watching this channel. Transactions are going to crash in 2023. Morgan Stanley, they've already crashed, buddy. That's not much of a call. I've been telling you they're going to go down sub 4 million. Thanks for catching along. However, prices will be, low single digits negative is what they were calling for. They're calling for the largest sales plunge ever. And pending home sales were down 4.6% month on month, or 36% year on year last month. That was pending home sales. Open Door CEO stepped down. Don't know if you heard that, but Open Store CEO stepped down. The CFO took over. That's interesting. And then finally, Bank of America sees a big stock decline of 24%, and we will have a recession in 2023. So that's what I got for you for Friday, December 2nd. I will record Saturday, December 3rd now. Thank you so much.